Welcome to class number 7. In the last 2 classes, we discussed important aspects of managing our cash, such as creating an emergency fund, weighing banks versus credit unions, and ensuring that our deposits are safe. In this class, we're going to round out our lessons on cash with a variety of other topics. Let's get started. First, I want to address an often confused nuance that relates to bank and credit union accounts. I want to make a distinction between 2 types of accounts, one of which is covered by deposit insurance and one of which is not covered by deposit insurance. The names of these 2 types of accounts are very similar, which often leads to confusion. Money market deposit accounts, or MMDAs, are insured by FDIC and NCUA insurance. As we discussed in our last class, this type of account operates similarly to checking and savings accounts. MMDAs should not be confused with another type of product called a money market fund. A money market fund is a type of investment fund which people can invest in through brokerage and retirement investment accounts. We'll talk about this type of investment later, but for now, just note that money market funds are not covered by the FDIC and NCUA insurance programs, while money market deposit accounts are covered. Additionally, we haven't yet discussed a key aspect of bank and credit union accounts, and that's account fees. Many financial institutions charge service fees and a wide range of other fees that eat away at the amount we have deposited. Some even charge minimum balance fees, also called account maintenance fees, and fees to use coin counting services, or even fees to buy a money order or a bank check. A minimum balance fee is a fee charged when you fail to keep a minimum amount deposited during the month. Money orders and bank checks are checks issued directly by banks that you can purchase to prove that you indeed have the money to be able to write the check. These are usually requested when you make a large purchase, like putting a down payment on a home. Let's stick to the fee discussion. Fees are another main driver of a financial institution's revenue. While fees represent revenue to a bank, they represent an expense to us. Therefore, we don't like high fees, and it goes without saying that generally it's smart to minimize the fees you pay for your accounts. It is important to know that a bank or credit union is required by law to provide you with a list of all fees associated with your accounts whenever you open an account or whenever the fees change. On that note, it's smart to know if there is a minimum balance for any of your accounts. As mentioned, some financial institutions will charge you a fee and/or give you a lower interest rate if you don't meet the minimum balance requirements. Keep the minimum balance requirements and the service fees in the back of your mind. Again, fees increase your expenses, and lower interest earned on your deposits reduces your revenue. It always comes back to those personal financial statements we learned in our first 3 classes. What about our account activity statements? Should I get a paper statement monthly, or should I have them sent to me electronically? Many people recommend getting online statements, which I actually disagree with. The reason? How many people actually review their online statements? These often get lost in your email inbox, only to never be reviewed or seen again. This is one area where I think it's smart to continue getting paper statements in the mail. When statements are sent to you on paper, you're more likely to open the mail and actually review the activity on the statement. Look out for monthly service fees, the interest rate that you're getting or not getting, and any unauthorized activity on your statements. There is value to certain types of automation, but I believe this is not one of them. Here's an insider tip. Financial institutions would rather have their customers receive electronic statements because they know most people aren't going to look at them and see how much in fees they are getting charged or how little interest they are receiving. Think about it. What about unauthorized or fraudulent purchases? What can I do if I notice these? Well, later in our program, we're going to do at least one entire lesson on preventing identity theft and fraud on your bank accounts, including your debit card. For now, know 3 things. First, it's important to review your account statements monthly for unauthorized activity. Second, if you identify any fraud on your account, notify your bank or credit union immediately and consider filing a police report. And third, there are limits in some circumstances for how much fraud you are responsible for. For instance, as of the date of this class, if someone steals your debit card in the United States, you are only liable for up to $50 of unauthorized purchases if you notify your financial institution within 2 business days. Up to $500 if you notify them within 60 days. And you may be liable for the entire amount of the fraud if you don't take necessary action within 60 days. Since debit card fraud protection has limits, it may be a good idea to only use a debit card for cash withdrawals to limit the amount of transactions you use it for. Credit cards generally offer better protection against fraud. We will cover the pluses and minuses to using credit cards in a later class. The last topic I'm going to address quickly is virtual or online banks, or those without a physical branch presence. The same rules apply to online banks as they do to banks with branches, as it relates to making sure they are covered by deposit insurance. Personally, I prefer financial institutions with a branch presence in case I need to speak to someone in person. Virtual banks may make it difficult to speak to a human, as they often utilize AI or artificial intelligence, aka computers, and other technology-based approaches to answer your questions. I still believe it's best to speak with a human face-to-face if you need help with your account. Before we go, I have a quick homework assignment. Decide if you want to get paper or electronic statements on your accounts. Set a plan to review your activity monthly and look out for any fees, what interest rate you are receiving, and any unauthorized activity. Consider whether you should use another financial institution or if this one is still right for you. That concludes our classes on cash. But let me stress that managing your cash is an incredibly crucial part of your financial well-being. In our next class, we're going to shift from managing cash to managing debt. Before we go, I really want to commend you for your continued attention and appetite to building your financial skill set. It's truly a journey, but one that I really believe you are committed to. If you have any questions at all, please contact me at opusmonetequestions@gmail.com or comment below, and I will try my best to get back to you as soon as I can. Thanks for watching. We rely heavily on recommendations. Please follow us on Instagram, subscribe to us and like this video on YouTube, and share our program with your friends and family. See you all in class number 8. Peace!